Hello and welcome back to another episode of Financial News and Your Money. Today is August 14th and my name is Paul Munichel. I'm a financial advisor at Ameriprise Financial, and Ron Jankowski is off on assignment today, so you are stuck with just me for today's show. I'm going to go ahead and dive right into the data and we'll take it away. So we are looking at forward earnings estimates to stabilize. During any given earnings release season, near-term forward estimates are always revised lower. Over the course of the current release season, however, forward estimates have largely held steady. Through Friday, S&P 500 consensus earnings per share estimates for Q3 are down just 3 pennies. Relative to their July 3rd levels. Now, estimates for Q4, meanwhile, have been revised lower by just 9 cents. So as seen in the data, estimates for 2024 have also leveled off in recent weeks and currently look for earnings of $246.06. That's a full 66 cents higher than Q2 ending estimates. Again, through last Friday, 460 or about 91% of S&P 500 companies had reported their Q2 results. Now this week, the earnings calendar is dominated by retailers. 17 S&P 500 companies are on the docket, including Walmart, Target, and Home Depot. The blended estimate for S&P 500 Q2 earnings per share now stands at negative 5% on sales growth of 0.7%, and that's at the end of the quarter, which was June 30th. Analyst consensus estimates had predicted a 7.4% decline in EPS and a 0.3% drop in sales. Now, in looking at performance by sector, almost all the downside earnings pressure comes from 3 sectors: energy, healthcare, and materials. Aggregate sales weakness, meanwhile, primarily comes from sharp declines in energy and materials due to this year's lower commodity prices. Now, if we exclude just these 2 sectors, S&P 500 Q2 earnings per share growth would be positive 2.6% year over year on sales growth of positive 4.2%. As we mentioned previously, the S&P 500's heavy allotment of multinational companies has also weighed on results. Slower international economic growth, a strong U.S. dollar, and adverse business conditions in China have combined to pressure results for U.S. multinationals overall. According to FactSet, through the second week of the earnings reporting season, for companies with 50% or less of their sales in the U.S., they were showing a blended EPS growth rate of just 0.4%, while companies with 50% or more of their sales outside the U.S. had a blended EPS growth rate of negative 20.8%. Again, data is sourced from FactSet, and we have other sources as well included in the data there. That's going to conclude what I normally do. This is the portion of the show where Ron gives you current data for at least Monday's market open and the year-to-date major index results. So I'm going to go ahead and do that. U.S. futures, again, for today, Monday, they're modestly higher this morning after last week's second consecutive week of declines. This week, the major retailers, as I said, announce their earnings and provide insight into consumer spending. Looking overseas, we have stocks in Asia closing lower overnight, and European markets are mixed at midday. For fixed income, the yield on the 10-year Treasury is at 4.17%. WTI is trading lower at $82.51, and gold is down 0.2%. Year-to-date numbers still positive, still strong for the major indexes. We've got the S&P 500 up 17%. Dow Jones Industrials are up 7%, and the NASDAQ a positive 31%. That's going to conclude the first half of today's show. I invite you to stay with us. I'll be right back with the second half of the show, the Your Money portion of the show. And we're going to talk about ways to help recent graduates achieve financial stability, which of course goes for more than just recent college grads. It really goes for anyone. So stay with us. I'll be right back. All right, thanks for staying with us. I am back as promised, and my topic today is how to help recent graduates achieve financial stability. So let's dive into it. Graduating from college often marks a time in life when young adults take on responsibility over their own finances. Now, if you're the parent of a recent graduate who you supported financially through college, you may be looking forward to passing the torch to them, but you may also want to help them get off on the right foot. So today we're going to go over some tips that you can pass along. And again, these go for everyone, not just, recent grads. 1, study your employee benefits. So for many recent grads, this is the first time they've been offered a 401k, health insurance, or the chance to purchase additional time off. Before enrolling in benefits, graduates should thoroughly research and understand their options. Remind them that it's okay to have questions, such as whether they should consider disability insurance or if a plan with a health savings account is the right fit. Their company's human resources department or benefits provider may be good resources for information and support. If they have questions specific to their financial situation, they should consider meeting with a financial professional. A financial advisor can provide objective advice and answers to more technical questions. Point number 2, have a plan for your debt and credit. So graduates today have more student loan debt than previous generations, which means balancing their post-grad lifestyle with student loan payments should be a top priority. They should consider the value of consistently paying above the minimum amount due. Establishing this responsible habit can help them avoid costly interest rate charges and late fees. The same thinking should be applied to all forms of credit. It's important for young adults to establish a good credit history, so opening a credit card can be a wise financial move. In general, however, it's best to stick to 1 or 2 credit cards to avoid overextending. Tip number 3, develop a budget. Remind your new grad that without careful planning, it's easy for their hard-earned paychecks to trickle away. Creating a budget can help young adults feel in control and accountable for their cash flow. Budgeting, while often a mundane task, can help ensure their money is being spent on or saved for the items that are most important to them. This is an exciting time for graduates or anyone, but it's also an important time to get the right financial discipline in place. Your guidance can help them build a solid foundation. And again, those 3 tips, geared towards new college grads, but as you can see, they apply to almost anyone. Good, solid financial tips can take some stress off your life, hopefully, and put you in a good financial situation, both for pre-retirement and post-retirement. And as usual, if you are working with a financial advisor, that's great. If you're not, or you'd like a second opinion to the one you are working with, you can feel free to give me a call. And I can be reached directly at 708-226-3412. And that's going to conclude today's show. So I appreciate everyone watching. And I am going to sign off for myself, Paul Municle, and also for Ron Jankowski. We will be back next week. So have a good week this week, and we'll be back next week with brand new topics. See you then.